So today I'm going to talk about what is going on in the economy and why are we in an imminent economic collapse in the world. It's a global could be a global recession, and it's important that you listen to this information because it could be the end of the US dollar and the end of the financial system. Not yet, don't panic, but all the information is a little bit scary, but it's important that you are informed about what is going on in the world. So everybody knows that this is a market crash and a market collapse because the the basically the stock market it's presenting symptoms of weakness. They're not for example, this is an example of the Dow Jones Industrial Average, which is an index that um, let's say that collects a lot of information from the most important companies in the United States. It's a stock market index that measures the stock performance of large companies listed on stock exchanges in the United States. And if you invest some money, you can gain money by just when this goes up. But in recent weeks, there has been a dramatic collapse. And this collapse represents that a lot of people is losing money in the stock market. So right now you can see these trend lines that I draw. Well, I'm not a financial advisor. This is not a financial advice or anything, but a lot of professional traders to see where the price is going to go. And normally, if it's broken, something is going to happen. It goes to the downside. The trend was broken in the past weeks and it collapsed up to here. But when it collapses, normally retest the, the past trend. But right now, this could be lost until here. So if somebody entered the stock market in 2014 and everything collapsed, all the gains could be lost. Okay. So this is another index, which is the S&P 500, which is as well very, very important in the United States. And right now you can see that there's like a steep trend and could be the symptom of an economic bubble, right? Because this is a 2008 crisis and this was up. Well, in 2008, it fell down and hit the bottom around the summer, and there was a recovery to the upside until the recent weeks. From the top to the bottom, it took approximately 16 months to hit the bottom, from the top to the bottom. But right now, the fall is very, very pronounced, and there is a small jump to the upside. There is like many could say that it's a recovery, but I doubt it because as you can see further, here is what is going on in the economy. There's like this is a chart that demonstrates the US jobless claims, and they hit a record basically. Like as you can see here, just in recent 2 weeks, 6.65 million people, they don't have a job and they're claiming for one. And I was reading a recent book of the financial crisis of 2008, and in the book said that 2 million people were unemployed during that recession. But as you can see, this is like super, super exaggerated. And basically, it tells us that we're in deep, deep trouble. Even though if this was in 3 million or whatever, we're really, really in deep trouble. And this is not the reality of what is happening. This recovery is not represent the reality of the United States right now. We're going through a pandemic, and this is something that is going on in the economy, and well, just be aware of what is going on in the stock market. Those indexes tells us about a bubble, and bubbles burst when you push very hard on the economy. And this is another situation that, like, the USA is increasing the debt to unprecedented amounts. Basically, this is like 24 trillion US dollars, and the um, well, the GDP cannot cover the national debt. Just It's just impossible. And if you compare it to other leading economies, well, actually, the United States has a huge debt, and it's losing its economic status in front of the other nations. So people right now will start thinking like, hey, it's a weak economy. Can they pay of the money that I invest in bonds or treasuries or whatever? People will start questioning if they are able to pay. So if they're not producing what they think they can produce, well, something is going on. And looking at the jobless claim, the pandemic, and basically, like, in after 2008, the economy was not strong enough. So this problem is just not, it didn't start it in the pandemic. It was from years and years before, of something that is rottening. Really, the economic system, it's not healthy, and it has been abused by many people. Here is the US dollar currency index, which is basically an index that measures the US dollar performance against other leading currencies like the Japanese yen, or the pound, or the British pound, for example. So as you can see, there is a trend, a declining trend, and it's losing its power. But right now, it went up in the middle of a crisis. And why is that? Because it when there's a financial crisis, people want cash. People are getting margin. The banks are getting margin calls, and basically they want their money back in their pockets. So you get, if you have you invested in the stock market in US dollars, where you want those dollar back. So I guess this is why it's going up, but it doesn't measure the reality of a great nation that it's performing and creating value and creating jobs and leading a world, and as a powerful economy. So this chart is a little bit well, a little bit surprising, but this is the monetary base, basically, which is all the money that is circulating in our economic system, based in US dollars, and this is from the Board of Governors of the Federal Reserve System. You can see again, the gray lines are economic recessions, and this, every time the Federal Reserve is creating and creating more and more money out of thin air. And this is because when the US government wants to go to war, for example, they don't request money from its citizens. Basically, you an American citizen that doesn't pay €100 more, $100 more when they go to war. They just remain the same. So they basically create money out of thin air. They go to war by deficit spending, and all that money that is created out of thin air gets back in the economy, creating possibly inflation. So this is the crisis of 2008. And at that moment, everybody was saying like it was crazy. The Federal Reserve went crazy, how much money printing, whatever. And then people forget that there was a crisis, but they continue to print a lot and a lot of money. And when this pandemic started, well, everything was going down, but it didn't. Basically, it went up. Just this line is just 2 weeks, like 2 weeks of money printing. Well, it's not printing, they just type it in a computer and money is created through the bank system. So, how they can reduce this monetary base? Well, they could increase the reserve that banks need to have in order to be solvent, let's say. And another one is basically the Federal Reserve shuts down the money printing or shut down, they don't produce money out of thin air anymore, but it's crazy. And for example, the 2000 bubble was a very important crisis. It shook a lot of emerging economies. It was really strong. And look at how money they print at that moment. It was it was ridiculous compared to what is printing right now. So I will show you another chart that it's very very um, important as well to understand how money is created and how does it affect the economy. This is a small formula that it's basically like an economic formula about prices and inflation. So when the monetary base is multiplied by the velocity of money, which I will explain it soon, divided by the wealth created, it's equal to the prices. So the velocity of money is basically every time someone exchange a dollar by creating value in an exchange of goods or services. For example, if you buy a croissant in the morning in the bakery, that dollar will be exchanged from you to the baker shop. Then that bakery will pay a taxi driver. That taxi driver will pay for another service, and that will create wealth, basically. So the velocity of money is how many times a dollar was exchanged throughout the day or years or whatever. So as you can see, it was declining since 2010 or 8, and this was a weakness in the economy because people are saving money, they're not spending, and they're not creating value basically, because when a dollar is exchanged is because it's creating something, it's creating wealth of an economy. So going back to the monetary base, if you are printing money to con to balance this velocity, well, you are basically manipulating in some way the economy so you don't go to deflation. So this is another shocking and interesting chart because these are um, overnight repurchase agreement, which is basically how many times the Federal Reserve helped the banks in order that so that they are not depleted of the reserves that they have to have by law. So a bank must have certain reserves every day in their balance sheet so that they don't go bankrupt. In today's world, interest rates are so low that banks have to really lend all their money in order to make profits. The bank make profits by every time they lend money to someone, and that someone pays back the loan. So the the interest rates are basically the profits of the bank. So in order to make profits with low interest rates, which are close to zero, they have to lend a lot of money. And sometimes, in order to compete with other banks or other economies, they just lend everything, and basically they don't have reserves. And when this happened, the Federal Reserves lend them money, and it's called a repurchase agreement because the Federal Reserve buys some assets from the banks, And this is basically like a short-term loan that has to be repaid, repurchased, let's say. And normally it purchase securities or bonds or some IOUs. And as you can see, it has never happened before until the crisis, and recently it has been abused. It's really like a lot of things going on there. So I found on internet that the government, let's say, tried, the central governments tried, and the central banks control inflation through some basic products measured in by some formula in the economy. So um, the U.S. government picks some products from what the American consume, and they display the inflation rate. So low inflation rates like 2% or 3%, normally they are healthy because the economy is leveraging, and basically when they print money, as I showed you, your purchasing power goes down. But at the end, it's not um, some, according to this source, they are lying basically because they choose the products that they are more convenient for them to show to the people. But the reality is that inflation is high, it's at 10% more or less. So that means how inflation affects you, because if you store, let's say, $1 in the drawer, uh, inflation will take basically value out of your existent money. So if the inflation is high, your purchasing power gets reduced over time. So at the end, there is high inflation. And when there is more money printing, inflation goes up and up. So I don't know if they're controlling the inflation, but these make me think that even though it's around 5, it's still high for to be a leading economy in the world. So um, this is as well another bubble that exploded in 2008, which was the housing bubble. And as you can see, it fell down and then again started inflating again. So now the bubble will burst stronger than it was before. So for you to, so it's important that you see that yes, inflation exists, and it exists in assets like the stock market, like the charts that I showed you in the first place. So there is something going on in the U.S. economy, that people are really consuming very expensive products, and they're paying more, and their savings are getting basically beaten down by money printing and the inflation rate that exists. So here's another thing, like the central banks, they basically lower their interest rates, and in the eurozone, for example, in Europe, there are even negative interest rates. That means that the the cost of money, it's negative. They basically charge you for saving money. And for example, in Europe, if you ask to the bank for 100,000 euros, they charge you like a 2%. So getting loans from the banks, it's really, really cheap. You get money so easily, and sometimes not even questions are asked. Like they just see some paperwork and they just lend you money. So the United States was competing with other economies with lower interest rates. Let's say that if you're living in Europe, companies could borrow cheaper money from banks than in the United States. But right now that the recession started, well, everyone went low. But it is important to think that if you go very, very low, it's hard to go out from there, because basically you're injecting more and more liquidity into assets. Because, for example, companies, borrow cheap money to buy, let's say, property. So property goes up in price because there's a lot of people buying properties. So interest rates right now are really, really low. So the cost of money is really low and very cheap to get money from banks, and that inflates assets. So the policy rates of other countries are also expected to be cut, because when the economy is in a recession, they lend money in order um, to save other countries for to keep up with their expenses and with their working capital and cash flow. So they basically help companies or individuals to pay their debt sooner, or to basically stimulate the economy. So a lot of countries are lowering their interest rates. Maybe some others very hard. They're not competing with other economies that have lower interest rates. But when they go down so much, like in Japan or the Eurozone or Switzerland, it's very hard to go up. And this normally leads to inflation. And this is the worst that it could happen to an economy. So it's more desirable that the countries have higher interest rates. This is because the price of borrowing, it's more expensive. So people really produce value with their own terms. Okay. So why inflation? What I'm talking about inflation, because as I told you, the average American citizen doesn't pay for the war. Indirectly, they will pay for the war, because every time the United States go to war, they don't increase you don't pay, for example, $100 deposit to the government. They basically just go to war, and the Congress allows them, and they print money. They pay, for example, for weapons to soldiers or whatever. They create money out of thin air, and they just sell those bonds to other countries. That's deficit spending and bond creation through the Treasury Department. So every time that money goes back in the system, it creates inflation, because there's a lot of money circulating around the economy. So the war on terror was really, really expensive. And that is really creating a lot of inflation. These events, they basically are financed by the economic system, and other people pays for it. Other investors that are buying bonds or buying treasuries from the United States in dollars, they're basically financing everything, and they expect that the tax collectors pays them back with interest. But as you can remember, the economy it's in huge debt. They're not able, they will never be able to pay back all their debt. So we're in a black loop in the economy, and basically we don't know where this huge bubble of everything is going to burst. So the primary risk in the short term is that the primary market for bonds basically dried out. So when people in other countries, like emerging countries like Mexico, or maybe even Canada, well, not emerging countries, Canada, but Canada, Japan, a lot of savers, they want to save in dollars because they don't trust their national currency. For example, in Mexico, uh, the Mexican peso is very volatile. So people that want to save in US dollar, because every time there is a crisis, the Mexican peso goes to the sky and it depreciates. So they save in money, and they are requesting US bonds, which is supposed to be a safe asset. But right now that is failing, because the US economy is really failing, and it's not growing, and basically it's dried out. So there's a liquidity problem. So according to the Bank for International Settlements, the outstanding amount of dollar denominated bonds issued by emerging and European countries, in addition to China, has doubled from 30 to 60 trillion between 2008 and 2019. Those countries are now facing over a 2 trillion of dollar maturities in the next 2 years. What does this mean? Basically, the money printing chart that I show you, they can do it, but because of this, because a lot of people are saving in US dollars and there is a request for US dollars, but the US economy is not able to pay them back. So every time the Federal Reserve makes the quantitative easing, it basically is taking wealth out of US dollar citizens or US dollar holders. I'm sorry. Every time this happens, all your dollars in your bank account are drying up because wealth is taking out of the existing money. So another thing that is going on in the world is that Brexit is an event that maybe was the trigger for many things, but when this happens, well, the monetary system is in on balance, let's say. So there is something going on. Another thing is that the oil price, it's very low right now, and this is the biggest markets of all. Everything is made out of oil. So when oil prices and there is like very low demand for this means that the economy is struggling. So I don't know what's going on, but there is something big happening in the economy. And I recently saw this chart from Ray Dalio that explains how these economic cycles are bigger. So this could be the end of the United States as a leading economy and as an empire. And normally these empires finish when these great economies start printing money like crazy. So as you can see, here is the Netherlands, the orange line. It was a superpower, and these are as well major wars and recessions and everything. So basically, it went up. Then the UK took power as a superpower. Then the US, and now it seems that China, it's taking more power, and it's going up. But this is a very steep um, well, the China's growth and economic growth has been as well very impressive. So we don't know what's going on. Maybe this pandemic will collapse the financial system and something big will happen. So it's important that you are aware of the situation, and I hope that you enjoyed and you will analyze by yourself this information. Please question it. Please do further research, and please share this information to everyone. Subscribe to the channel, um, or do just please share it, like and subscribe. This will help a lot, and I will maybe do more videos like this. So I think this is everything. Please comment below and let me know what you are thinking, and if you think that this is true or crap or bullshit, please just tell me, and I will be happy to answer you. Okay, thank you.